Hello, John Hunter with Guaranteed Rate, and coming at you this week with the topic of divorce and debt. How do mortgage companies view different types of debt in a mortgage situation, either from the past or current? Jumping right into it, mortgage debt is probably the big one. That's the one that comes up the most. It's usually most people's largest liability. Um, the real question in most cases is when somebody gets a home in a settlement or uh, is required to pay the debt, is the other spouse on the title or not? Most people, when they buy a home and they're married, they buy it jointly. They're both on title. They're both on the debt, which means it's on both of their credit report. Very often the divorce decrees can be clean, where it says you must refinance to remove me from the debt, also removed from title, which are very separate issues, right? Title obviously can be removed with just a quitclaim deed. It's a little bit harder to get off the debt. Some loans will are allowed to be assumable, like FHA. You can assume a loan without refinancing it. You can assume a person's liability. It's usually just a fee that you pay. VA is same thing. You can assume those loans. It's assumable. It's written right in the deed of trust. But with conventional loans, jumbo loans, other types of loans, very often they're not assumable, and the lenders will look at those case by case at best. So you just can't assume it. Getting removed from title is the easy part. Getting removed from the loan is not necessarily the easy part. But really, getting removed from the loan, unless you fear default, is really kind of a non issue because lenders don't count the debt. If it's clear in the divorce decree that it is one person's responsibility versus another, me as a lender will look at the decree and say, okay, if the decree says it's not their responsibility, we won't count that debt against them. Now, it does come into play if it is late or if there are issues with the mortgage. Those will affect the credit scores. See, the bureaus don't really care about the decree. They will never stop reporting. The lenders aren't required to stop reporting. So they just don't. The lenders just have no recourse. They can't come after anybody because of the decree, but they do report and will report if they're ever late. So if that's an issue, obviously you want to get them removed from title. But if it's a deal breaker, it doesn't really always matter. Now, that said, obviously the credit scores can matter. Getting it removed, though, long term, doesn't necessarily have to be time related. I have seen some decrees, and I've helped advise people on this. Uh, in this unique market, when rates are much higher than they were, say, a couple of years ago, a lot of people are sitting on mortgages at 3% interest, but yet they want to be removed from that mortgage, say that if their spouse got it in the decree. Saying tying it to a time frame, say like a year or even 2 years, sometimes can be tough. What if rates are way higher? What I've recommended people do recently is don't tie it to a timeline. Maybe tie it to a market condition. So let's say if somebody's at 4% and then they have an 8% or 10% second mortgage or a home equity line of credit, you can say the blended rate is somewhere, depending on the loan amount, somewhere between, maybe 5 and 6%. Well, you can put in there that if the market improves to this level, then they'll refinance. That way, you can make it so they move on it, and when the time comes, they do it, but also not put a time limit on it, which there's pushback on that right now, obviously, with the market and the rates being where they're at. Hopefully that makes a little bit of sense. If not, feel free to give me a call. Also, consumer debt, same thing. If it's in the decree and it's very specific, we won't hold it against them. If they say the credit card, the Chase credit card is the spouse or the husband's responsibility, we will omit that debt even if it's on the credit report. And with car loans and whatnot, sometimes it's hard to close those out right away, or they're impossible. But we won't count those debt against people of the decree. And that even goes so far as, let's say somebody defaults. Let's worst case scenario. You have a mortgage and your ex-spouse is responsible for paying it, and then they default and it goes into foreclosure. If we can show on the divorce decree that foreclosure proceeding was on a property that the other spouse is responsible for paying, we will omit that. We won't count it against them, even in the worst case scenario, like a foreclosure um, proceeding. So That's good to know. So it does protect a little bit. Obviously, in that kind of a scenario, the credit scores will probably be impacted. But overall, we won't count it against them. We will admit it. So that's good news. Anyway, main takeaway I would say is be as specific as possible when defining the debt. If there's a property and there's multiple tax parcels, put the parcel number in there. The address sometimes isn't sufficient, and if it's unclear as a lender, we're going to count it against them. And I have seen some decrees that weren't very clear that had either partial or missing account numbers, or would have a name of a bank but not an address. And if they own more than one property and the transfer of the servicing happened, that can be troublesome. So hopefully that's enough to give you a little bit of insight in how we handle it. Hopefully that taught you something maybe you didn't know. I don't know. But hopefully everything's going great, and have a wonderful week. If you have any questions, any needs, real estate, finance related, John Hunter with Guaranteed Rate, always here to help. Have a wonderful week. Bye bye.